get, okay, so we're going there now. Sorry about that. Sorry, sorry about that. Thank you very much for thank you very much for bringing that up. I definitely, I was offline. Sound is off. Thank you. Oh, no sound. Ouch. Oh, I'm so sorry about this. And I've been broadcasting for 30 minutes with nothing. Gosh, so that's why, yeah, I am so sorry for that. So that's why people have left. Well, I understand. I understand. Hopefully you'll come back. Now that we are now that we're up, I should have checked the volumes before I did that. So thank you very, very much. Toyota. Toyota. So I think it's TMC is Toyota Motor Company. TMC, Toyota Motor Company. Let's see. No, let's see if Toyota, if I can get that up. Well, sorry about that. No sound. Can't hear you. Dance here. Oh, so terrible. So terrible. No sound on YouTube. Ouch. UPS is falling. I can't get up. Ouch. Oh, I'm sorry. So everybody, sound. I have fixed the sound. Fixed sound. Sorry about that. Okay, so hopefully you'll come back. You come back with the sound. Okay, so UPS. Let's see if we can get something for UPS here. UPS. All right, United Postal. Wow. Okay, it's pulling back. Okay, well, I understand why it's pulling back, and it's pulling back basically to the 50-day line. As you can see, it's pulling back to this right here. It looks like it's probably going to bounce. Unfortunately, it's going to bounce at 161. It's 166 right now. This probably wasn't the ideal place to buy it. It does not look like it is going to move higher, at least for right now. Let's see if we've got a ownership on it. Fantastic ownership. Fidelity Contra is in it. That's good. Checklist, and it's pretty good, 7 out of 9. So that's not bad on the checklist there. So wow, can't really can't really give you anything more on that. So on that, can't really give you a point good nor bad. All right, so let's look at Netflix. Netflix is an interesting one. NFLX, Netflix. Yep, Netflix. Okay, it's retaken the 40 days, so that is a very good sign. That is a very good sign on Netflix. It looks as if about 500. It looks like it's moving right up the 50-day moving average. Let's kind of look to see if we have. Boy, we have 9 out of 9 on this. Let's see. Let's look at the options action on it. Wow, I see some very good options action at about 520. Very, very nice. It's got a 100% checklist. 88. Any good place to buy this? Wow, I think the only place really you can buy this is the pullback to the 50-day, and that's 494. But yeah, if this is a little bit extended, it's a little rich for me, but it's a good stock. 494 is the buy point for that. Definitely 494. So sorry about that. No sound on YouTube. Thank you, man. Thank you thank you for bringing that forward. I apologize for not having that sound. SPY having trouble with the 50-day moving average. Well, let's look. It's hopefully it's getting support there. Let's see what's happening. Yeah, it definitely is, but it's still in a buy zone. So yeah, it is. But it's really moving right at it's basically hugging that 50-day line. So that's sort of where the spider is right now. It's right at that 50-day. It's right at that 50-day line. So that's kind of where it is right now. Could I think the key support level on the spider is the 50-day line, or about 335. So we're almost right on it. Let's see if I can. Yeah, 330, 332 on the spider. It seems like we've had good. This is kind of very good because we've had a lot of volume. So I do believe it is changed direction towards the upside. Now this is the daily chart that I'm looking at here. The last buy point, of course, was 323. It's above that. It's about $10 above that. So that was the last buy point on it. So I'm fairly confident. I'm fairly confident that you could buy at this level. I wouldn't necessarily do it. I just don't know how strong it's going to be. I mean, hopefully we're going to see a little bit more with the reopening. So hopefully with the reopening we're going to get a better deal than we got there. I apologize for no sound. Sorry about that. I just should check. I got to put that on my checklist to check the sound every time. I just didn't have it turned on. I'm so sorry about that. Oh, no sound. No sound. Ouch. Okay. All right. Isn't the buy point on Fastly 10 cents off the flag high? If it is a high flag, yes, actually that is true. That is true. Yes, you are absolutely right about that. So let's take a look at Fastly, FSLY. Get Fastly here, and yeah, there we go. Okay, so let's look at the weekly chart. In this, to really see it, you have to look at the weekly chart to see the high tide flag. But this is the high tide flag right here, and so basically it's going to be at about just slightly below that. So it's going to be about 94 minus 10, so about 94.10. It's at 93.75. So it's very, 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 very close to that high tide flag. So I definitely think we're in a I did buy this today, for full disclosure. I did buy Fastly today. But I did hedge my bet with a call option, 100 call option, and that's expiring on the 30th of October. So very good call. Thank you for that, and you are absolutely right about that. So no sound. Oh, I'm so sorry that everyone's probably gone away now. Goodness, no sound on Periscope either. Ouch. So hopefully, hopefully no sound, dude. Sorry. Sound on TikTok. Yeah, sorry about that. Golly. Are we still in a downtrend? Well, according to what I'm seeing, we are sort of on the knife's edge. We're not either up or down, but we are technically still in a correction. And I want to be very, very clear about that. We are still technically in a correction. And so, that's the main thing here. We are in a correction, and I want to kind of show you that on the chart. The NASDAQ is up, S&P and the Dow Jones are up, but we're just right on that 50-day line. So technically we are in a correction, but the downtrend seems to be losing its power. I do believe that we're going to move a little bit higher now towards the election. Cup and handle? I don't know exactly. No sound. Sorry about this. I hate this. You're not seeing all of the messages telling you there's no sound. I didn't see. I wasn't watching them. Fix sound. Yeah, there we go. Okay. Sorry about that. Okay. Sus. Thank you. Thank you for bearing with me. I appreciate it. MGT plus. Well, let's look at there to see where we're on there. So thank you for bringing that up about the sound. I'm sort of my own engineer, so hopefully we're going to get another intern for the engineer, which will be great. Medtronic, super great company, and looking at buy points on Medtronic. I think Medtronic is one of those great stocks. It's just great. Now, this is what they call the golden cross. So this is a very bullish sign here. We're still not to the back to where it was before the downturn in the economy, but it is pulled the 50 days build above the 200-day. That's very, very bullish. We've had excellent earnings per share. The only thing I don't like is that it's got a relative strength of 59. I don't like to buy them unless they have 80. Right now, let's look at the ownership. The ownership is super. There are 3,724 funds that own this. Wow, just amazing. It is a prime. It's got a lot going on for it. Unfortunately, though, I can't recommend it this time because it's only 5 of the 9 criteria. But it's an excellent, this is a watch list. Put this on the watch list. Don't buy this right now. It just isn't right time. It's a great company, but the chart pattern and the criteria just say that it's not. It's time to wait. It's time to wait. So I apologize about that. Still heard you on TikTok. Thank you very much. Thought on Macy's. Wow. I wish Macy's was doing better. I really, as a kid, I went to Macy's and I thought it was the best thing ever. I did. I thought, wow, Mom would take me to Macy's and it would be a great thing. Unfortunately, I can't say that anymore. I just wish, and it's kind of just, it's kind of the, death of American retail. JCPenney's in the category too. I love JCPenney's and they're going out of business right and left. No, I just can't recommend this. This has got a relative strength of 7. It's got a downward trend. Even if this dead cat bounces, which it's done a few times, I still think there's just better places to put your money right now than Macy's. I wish I could give it a recommendation, but it only has 3 out of the 9 criteria for buying. That's horrible. It isn't even a good stock to short because it's under $10. So this is tragic. But yeah, I cannot recommend this stock. I cannot recommend Macy's. Just a horrible stock, unfortunately. Great company, great store, horrible stock. Don't buy it, please. Sorry. Sorry about that. Okay, thought on Google. Well, Google is working, by the way. Google, my sound might not be working, but Google is working. Google is, basically now called Alphabet. Everybody knows that. It's a great stock. Now it's fallen back down to the 50-day. As of late, it hasn't been performing as well as it has been, but it's still, 14.69 per share. And let's look at the daily chart. I don't know if I would want to buy it right now, but you can see it consistently bounces off the 200-day. Boing, boing. And definitely it seems like it's finding support there. I would want to see this thing move above the 50-day before I'd even consider buying it. I just don't think it's a buy at this point. Yeah, it's only 4 out of the 9. I just, a lot of funds own it. 39, 36 funds own it. Just a ton of funds own this thing. But there's not a good buying, there's not really a buying opportunity on this right now. I don't know if it's a short, but it might be, because I'm starting to see a little bit of a formation here. This is the first shoulder, this is the head, and it looks as if we've got to see it challenge this 50-day line. If this challenges the 50-day line 3 or 4 times, I'm probably going to short this. Now, it's not time to short this at all. It's just time to put it on your short watch list. Why? Because it's got a long way to go to go down. So this might be a short. Not right now. See, how could you ever consider shorting Google? Well, I'm not really considering shorting Google yet, but if it does do certain things, then I might. So I want to be very careful about this. I don't want to buy this long. I think that it may have seen its better days in terms of going up like it is. Still a great stock, still a great company, but it may be a potential short in the future. Not now, but I will try to re-godcast as much as I can. I'll just keep on going. Thank you, Donnie. Appreciate it. Sorry about my sound. God, I wish that it is so frustrating when I, make these mistakes with sound like this. So thank you very, very much for bringing that to my attention. Can you look at SPAC? Now, SPAC is interesting also because this is the way that a lot of companies like Nikola went public this way, and a lot of companies, a company like Nikola went SPAQ. I'm sorry, Spartan Energy. I apologize. I thought you were talking about SPAC. No, SRAQ. Sorry, SRAQ. SRAQ. Okay, great. Thank you. Is that right? Did I get it right? SPAQ. I'm sorry. Wow. What is it? Gosh. Spartan Energy. Okay. Well, let's look at Spartan. You know, this is a relatively inexpensive stock, but you know, the oil patch has been hurt a lot by these low price of oil, but it does have relative strength of 89. That's not bad. And it's a blank check company that's going to merge. Okay, so this is going to focus on the energy industry. The thing about SPACs that's tough is SPACs are, you know, you just don't know what they're going to buy. Now there are a lot of bargains in the oil patch. I do think that oil is going to come back. I just don't know when, because there's a glut of oil on the world market, as we all know, especially the people here in Texas, like I am. You know, we do have an issue, you know, with the glut of the market. Now, there are some great things on the horizon with the energy market that I just want to tell you about that you might not have considered. Now, it's true. If you've watched me for any amount of time, you know that I'm a Tesla bull, and I do think electric cars really are a fantastic thing and are the way of the future. But don't get rid of the oil, because oil is not necessarily dead. Actually, the next place that I think, at least in the forthcoming future, is going to be in the natural gas area. And there's a company called Cheniere that I think you ought to be aware of. And it's a company that makes natural gas into liquefied natural gas. You think, well, that's okay. But that's actually a very hard thing to do. The cool thing about it is now we can, from the United States, take this gas, compress it, and then liquefy it, and then ship it via the ocean over to Europe, where it has a tremendous market. So I am not an anti-oil guy at all. I'm not an anti-oil and gas guy, but I think that the real next big, at least in the energy patch, the real next big thing I think is going to be in gas and liquefied gas. But let's look at Spartan Energy. I went on and on about that, and so we'll get back to Spartan Energy. Looks like it's coming back to the 21-day line. We've got excellent relative strength. Is it viable? Well, no, but almost. This is a watch list stock, definitely watch list. Let's look at the fund ownership. Not bad, not bad at all. You know, for a company that's in the oil patch, this is remarkably good, and I think that you know, this is something that you want to consider. I wouldn't buy this though right away. I'd watch list this one. Let's see if I can give you. I watch list this. I just can't be totally in this right now just because of you know, of that. But let's see if we have, if I can give you kind of any information on this one. So yeah, I can't. Yeah, these are kind of the SPACs out there, kind of how they rate. So I kind of want to show you that real quickly. You know, the composite rank of 45, this just isn't good enough. I just, it's terrible. It's 22 out of, you know, basically the Tortoise acquisition, that was the number one, and so that kind of gives you the thing. But I probably would watch this one. I probably would not. Unfortunately, I would not buy this one at this time. Oh, still can't hear. Ouch! You still can't hear. Oh, no, hopefully you can. I mean, I should be. Let's check. I'm going to check the mic again. So I'm so sorry about the audio there. No, I should be broadcasting. You should hear that on there. So let me check this as well. Okay, the sound should be up. You should be hearing it from the alternative mic. I had to switch to the house mic. I normally have my my boom mic, but that's not working. So I moved to the house mic on there. So okay, there we go. Okay, thank you for that. Can you talk about the buy point on Apple again? The sound was off. Okay, in full position. Wow. I'm in a full position at 115, a little high, but hoping for higher. You know, I think that's not necessarily bad. Let's see if we can. Let's see. I'm going to go back to, you know, I'm going to go back to Apple. Apple's, you know, it's still Apple. I mean, you know, even though it hasn't, you know, it's not rocketing up like some of the other stocks, it's still Apple, and this 5G iPhone is going to be terrific. It really is, and you know, so and we just had a split, so you know, I just can't really. There's not really a lot of bad that I can say about Apple right now. So let's look at the 10-minute chart. I want to look to see how it's trading today. We did have some serious selling at right at the close here, but I still think at 115 you're not too high. I would probably like to have been in, you know, a little bit less right at the 21-day exponential, which is about 113, 114. But I don't think this is a bad place to have entered. I don't think this is a bad place to enter. I think you definitely it moved above the 50-day. So I kind of think that, Danny, I think that, you know, I don't think this is necessarily a bad place. Now, here's the thing about this. Be careful on if there's another pullback. I don't think there's going to be on this one, but you want to set your stop, and this is important. You want to set your stop on this at basically 7% lower than you are currently. You know, this is very important that you this is very, very, very important that you do this, because this is the kind of thing that may make the difference if there's a snack back. I don't think there's gonna be. I don't. But you know, it's better to be safe than sorry on that. I don't think 115 it is a little high, but it's not absurdly high. So I think you have a fairly good. I think you're in it at a fairly good. You know, I think you're in a fairly good place on that. So, you know, but do set the stop. That's the most important thing. Do set the stop loss at 90. You know, take the 115, multiply it times 0.93, and that's going to give you. You know, that's going to give you a good place for that stop loss. All right. Hey, now, hey, Wendy, how are you? It's Penn National Gaming, PENN. This has been on fire. You know, the two really excellent stocks in this area are Penn National, of course, and DraftKings. And Penn National has just been doing fabulous. And look at this chart. I think you'll agree. Penn National is an excellent chart. It's moving right up. You know, it's right up that 10-day, and it's above the 21-day exponential. Very nice. It looks like they're going to be a blackout. Now, is this a high tide flag? Well, let's go over the weekly to see if that is. I don't think it is quite, but you know, this isn't really flagged yet. It's still moving up this 21-day average, but it seems to be getting a little bit of resistance here. So the question is it viable? Well, it's being bought by the funds, definitely. You know, in March it was only 476 funds. It's 525 funds in it now. So that's a very good bullish thing. What's the chart looks 6 out of 9? That's not bad. That's about the minimum that I'll accept. It's very good there, especially for something that's as speculative as this is. And so let's look at let's see if there's any news. You know, okay. I think that's definitely good. Industry and sector. Wow, the industry is excellent. Yeah, you know, I think this is possibly a very good deal. I think that, you know, you're looking at a very strong stock. Now, can you buy it at this level? Well, unfortunately the last buy point on this was 37.43, so that was a little time ago, a little while ago. Is it possible to buy this stock? Well, it's got some pretty bullish things going on. So, you know, it's 66% in funds. So I would. You might want to take a half position in this one. Penn National seems to be very strong. Now, of course, if you do this, you want to be very careful. You want to set those stop losses carefully, really, really carefully. So it looks like people are hearing me now. So I so appreciate. 30 minutes I yammered on with no sound. That's terrible. That's just terrible. But hey, I want to invest, not just trade. Well, that's a good question. You know, if you want to invest, here is a solution, and this is a very easy solution, easy to implement, and this will give you very, very, very good results. And it's an ETF strategy, and basically the way it works is you look at the way the market is trading. If the market is in a confirmed uptrend, which it is not now, unfortunately, it's in a correction, or in a uptrend under pressure, then you want to buy a quality ETF. The ETF I recommend, of course, is the QQQ, which is the largest technology ETF in the world, and it covers the NASDAQ 100. So right now, the market is in correction, so we wouldn't be invested in it. So here's how the program works. If the market is in an uptrend, we want to be 100% invested in the QQQ. When the market moves to uptrend under pressure, we want to sell half of that position and keep half of it in cash. If it moves to correction, which it is in now, we want to sell the entire fund altogether. And if we do this, we can expect a very, very good return. So I just kind of want to give you an idea of potentially of how that would work, because I think that that's an interesting way to trade. If you don't want to be you don't want to be a day trader or anything like that. You just want to invest, and you're really looking for solid earnings. For solid earnings, and that's really the strategy on that. So let me just kind of look at the ETF indexes and kind of how we would do that. So let's kind of pull over to that. Okay, here we go. Now another way to do this is just to buy the IBD 50. And how can you do that? Well, there's a mutual fund out there called the FFTY, and I want to show you how that's performed relative to the other shares. And I think that's the way to go. If you were to buy this versus the total return of the S&P 500, as you can see, this is the IBD 50, and this is the S&P 500. So we would have done much better had we been in the IBD 50. And there's a way to do that. It's very, very easy. All you have to do is to get the FFTY, and that will basically do that. And there's also the what they call LD leaders, and that's another one as well. So if you're not interested in trading individual stocks, I totally understand that. Some of the ETFs products out there are excellent, and if you do follow this little strategy, be fully invested when the market is in a confirmed uptrend, 50% invested when the market trend is under pressure, and 100% in cash when the market moves down, you will outperform most of the hedge fund managers on Wall Street. That's hard to believe, but it's true, and that's a very, very easy thing to do. So that's it. Thoughts on CNI? Is it a buy right now? A poor CNI, Canadian National, good firm, but I don't think you want to be buying it probably. But I want to just review that once again, Canadian National Railway, to see if it is a buy. Now, funds own about 35% of this, so that's a very good sign. The question is it a buy right now? Well, it seems to be hugging the 50-day moving average, but is it a buy? Let's look. We do have increasing fund ownership. That's very good. We have a pretty good checklist, 6 out of 9. That's my minimum for buying, so that's good. But the question is, do we want to buy that, or do we want to buy something that is possibly better than that? And I believe that if you're interested in the railroad kind of income, you might be interested in the company that is the biggest owner of a railroad in the world, and that's Berkshire Hathaway, BRKB. And let me just see there we go. And that might be a better bet, even though you might be able to only buy fewer shares. This might be a better bet than buying the Canadian National Railway, would be to buy Berkshire Hathaway. They own BNSF, and I think they're excellent, of course. Let's look at their buying criteria. It's not quite as good as the BNS, exactly, as Canadian National right now. It's only 5 out of 9. If you're looking to buy a railroad, though, Canadian Pacific is probably your best bet. That's CP on the railroads. I am not that bullish on the railroads, to be honest. So that's kind of my take on it. Okay, Spy's having trouble. Okay, let's see if I can give you Apple, Netflix. No sound on YouTube, thank you. Jim, it looks like the guy who hangs at the hardware store for Flatwell. It is sad. I got to get to the gym more and stop eating. Sorrento, CERN, SRNE. Let's look at how that one did. And that's on the small portfolio too. I want to show you kind of what I am currently in the small portfolio. So I'm going to switch over to that so you can see that right now. Mostly in cash, as you can see. I do have 4 positions. 1 in Sorrento, 1 in Tesla, 1 in Taiwan Semi, and 1 in Oracle. Now, my Sorrento position has not been the greatest. It's moved down a little bit, and I've only been in it, so I'm down 5%. Ouch. Hopefully it'll come back a little bit. The charts certainly look good, but you never can tell. So we are in a market that is moving sideways a little bit. So hopefully that will come back. I've set a stop loss, of course, so if worse happens and it goes down 7 or 8%, I'll be out anyway. So yeah. So, oh, yeah, I did talk a little bit about Tesla, but I think that's important to maybe revisit it because of my sound issues. Thank you so much for, for bearing with me with the sound. So, I'm definitely got to put that on my checklist of things to do before I get on the air. And I'm getting better, but I'm still amateur hour when it comes to that. Okay, with Tesla, we did close at about 429. That's pretty good. I've actually sold for Friday. I have a 440 call option. I may get called on that. It is just moving right up the 50-day. It's seeing some support at the 21-day exponential. I'm still liking Tesla, believe it or not. It's 7 out of 9. I still think it's very strong. 99 relative strength. I mean, I think we have increasing fund ownership. Let's look. Yes, we do. We have significant increasing fund ownership. We have Fidelity Contra Fund. That's one I always look for. Now, they don't own a lot. That's the issue. American Century being the biggest one in there. But I'm still very bullish on Tesla. And even at these levels, I do think it's possible you could possibly buy it. I'd be a little bit cautious in this market because we're not in a confirmed uptrend. We're still in sort of this, we are in a correction technically, and it may go lower, so it's a little bit difficult to buy here. If you do buy at this level, at the at about this level, the 429, the 420 level, I would really prefer it if you buy it at about 417, 415 in that range, but it is pretty volatile. So I still think it's a buy. I still think it's a buy into that. So I'm not, I'm still a Tesla bull. I'm still a Tesla bull right now. Regeneron, thoughts? And Regeneron could, it's one of the, of course, like Johnson & Johnson and Moderna, it's one of the stocks that really can benefit from a potential vaccine being developed, and they're definitely in the hunt. Now, unfortunately, it doesn't look, their chart doesn't look as good. But of course, we're seeing it move back down to the 200-day line at 559. I just, this is, it's 85% funds, which is great, but I just think in a way this one has sort of been overdone. For an individual investor, I think you're going to have a lot of trouble with this one, to be honest. It's fund dominated. Now, typically, I like to look at a stock when it's between about 20-25% fund ownership and about 70% fund ownership. Anything more than that, it typically gets to be inside baseball. And of course, I am a small investor, and most of the people I'm sure that are watching are too. So it's much more difficult. But I just wouldn't be in Regeneron probably right now. I don't know. This COVID thing with, I don't know if there's going to be a lot of winners in that. I mean, there are going to be some, but it's just very, very speculative. So I wouldn't be in it. Sell before the earnings. Always sell before the earnings, by the way. Always sell before the earnings, because here's the thing, and I know it sounds really strange, but in the stock market typically, all the expectations are priced into the stock coming into the earnings. When the earnings are announced, then it becomes real, and a lot of times people say, well, it either exceeded or it didn't exceed, or I'm out. So the best time, typically, if you're going to trade a stock, is to hold it into the earnings or into the big event, like a stock split or something like that, and then sell it right before, because then you typically will get the most expectation, and then when it comes back, sometimes it'll go higher, but usually it doesn't. It usually pulls back about 80% of the time. So sell before earnings, that's a very good thing. That's a very, very good thing to say. So Peloton, and of course this has been absolutely a big deal when it comes to staying home. I guess I don't have a Peloton, and I don't exercise enough. I can't really understand what the big fuss is about this, but let's look at the chart, because I mean, people have done incredibly well in Peloton. I think mainly what it is a lot of the analysts in New York have been cooped up in their little apartments, and they've only had a Peloton. So it's gotten some good stuff. This has a relatively typical, actually it's a little bit atypical IPO base. Now, what do I mean by the IPO base? Typically, in the first 3 months of trading after an IPO, you'll see it make a U shape. This didn't really quite make the U shape. It started up, there was a lot of excitement in it. It pulled back, and then it's moving back right up, right up as well. I don't, you probably if you traded this, you probably could make good money on it. Right now, it's trading up the 21-day exponential. It's got a 99 rating, which is excellent. This is not enough stock for investment, it's stock to trade. It's got 9 out of 10. That's excellent. The only problem is earnings per share just isn't earning as much, but it's still doing great on everything else. Do we have any fund ownership? We have a little bit, not a lot. Well, actually, we have a lot. With 428, that's incredible, actually. I'm sorry. And we have Lord Abbott in there. So, yeah, I would say that's, believe it or not, I would say it's probably a buy. I'm not going to buy it, but it probably is a buy. I mean, look at this volume there. So, I have to admit that Peloton is probably a buy. But if you do buy it, go in with a half position, set your stop losses at 7% down, because it can snap back on you. It can be nasty. Thoughts on Nikola? Well, Nikola is one of those stocks that comes around every time there's a tremendous movement in the market, tremendous up movement in the market. There definitely has been. And unfortunately, with that comes the fraudsters. And I'm afraid that Nikola is a fraud stock, even though it was bought by GM. GM has some real management issues right now. I think Mary Barra is a terrible leader, unfortunately. And I think a lot of people are gonna. It's sort of like an Enron. It's just, it's just not the stock that it was cracked up to be. So there you go. Okay, NFE. Let's look at NFE. NFE. All right. New Fortress Energy. This has been interesting. I've seen this one a few times. I haven't really studied this stock all that much, but let's look at the chart to see if I can define anything. Yeah, the last consolidation was 1610 with the buy point on. This is 4401. That's really a lot higher. Wow, it's just been moving up very nice. There's something going on with the stock. It's only 8% fund ownership, though. This is interesting. There's something going on with it. I can't put my finger on what's going on with this stock. It's got, 7 out of 9. That's not bad. Let's look at the fund ownership. It's got fund ownership that's increasing. Now, it dropped a little bit, and it's coming back. So people seem to like this stock. I just can't figure it out. 99 relative strength. That's excellent. I don't know if it's buyable at these levels, though. It's really tough to buy a stock like this, especially in a weak market that is topping. I think it's a little dangerous to buy this. It's a good stock based on the chart, but if the market moves into correction again, I mean, it is technically in correction, pulling out of it, this could come down very hard. So I wouldn't buy this one right now. I'd watch list it. I'd be a little bit careful on this one. It's an excellent chart, though. Excellent chart as well. Okay, so what source? Okay, what source? Yeah, that's a great question. What source do you use to see fund ownership? Well, I have actually very specialized software that shows me a lot of information that it's not proprietary, but it gathers it from all sources on the web, and one of them is fund ownership. And why am I so interested in fund ownership? Well, a stock typically isn't moved up and down by retail investors. There's just not enough of them. But fund ownership is a different thing. So you want to find stocks that funds are accumulating. Of course, right? That makes sense. So I like to see stocks that are 25% owned by funds and maybe up to about 40%. That's the sweet spot for me, because those stocks are being accumulated. And I use what they call MarketSmith, and it's available in there. So that's the answer to your question. And by the way, I don't get paid at all from Investor Business Daily. I wish I did, but it's great stock. And if you want to learn more, super duper easy to find out the trading system that I use, and it's really simple, and it's on my website. So you can just go directly to the website, and I'll just kind of show you how it looks on the website. This is how it looks on the website. This is the book you want to get first: How to Make Money in Stocks: A Winning System, Good Times or Bad, by William O'Neill. And you can buy it off my site. I'd appreciate it if you do buy it off my site, and that way, you can get it right out there. This will show you the CAN-SLIM system, and it's not an expensive book. Definitely worth your time looking at this. It's how I learned how to trade. Also, we have free stock alerts. Subscribe to our free stock alerts. Just first, last name, and email, and then hit the subscribe button, of course. And if you want to look at our small portfolio, Just need your first and last name. Hit the submit button there. You'll get access to the small portfolio. You'll get access to the smart portfolio as well. So that's a great way to trade. And if you're looking on TikTok, super easy to get onto the trade alerts. No problem. All you have to do is go to my bio, hit the link, and you'll be taken directly to the sign up page. Well, I am so sorry about the sound today. That is terrible. But you mean more fund ownership is not good? No, actually, Ollie, fund ownership is good, but it's only good within a certain range. Typically, if a fund, if it's owned by more than about 80%, if it's about 80% in funds, then it's sort of inside baseball. But if it's moving up from say 25% ownership on up to 40 to 50, that's a great time to be in it. So not all stocks are going to be held by funds, but the ones that are, you want to see increasing fund ownership, and you want to see increasing volume in the fund ownership. So that's the reason I concentrate on that fund ownership, because they can really move a stock. So if funds are moving into the stock, typically there's a lot of support, and the price typically will move higher, because funds can move the price of the stock, whereas it's much more difficult, unfortunately, for the retail investor to do that. So, well, thank you again. I will be back tomorrow, and thanks again for telling me about my sound. I apologize for that. Hopefully I'm going to get it right this next time. I know that I'm falling over myself, but I can't believe I did that and deprived everyone that was willing to, that came by and take a look of their time. So I will be back tomorrow at 2:30 Central Time. Till then, happy trading and stay safe.